Hello traders, welcome to another video. So in this video, we are going to be looking at market structure. We are going to be looking at how you can avoid certain types of traps while trading the market with simple market structure technique, right? I'm going to be showing you the technique and I'm going to be showing you how you can use it to your advantage and how to avoid traps such as this. So on our screen here, we have a diagram of the market, right? So presumably this is an uptrend market. And this diagram is derived from a real example we took a trade from this week. So now, looking at this, you can first spot here that the market is making higher highs, and higher lows. That is the basic characteristics of an uptrend. Now, in this trend here, we have a higher high here, higher low. We expect this first higher low here to be taken out, then before we have a valid break of structure. So that is exactly what happened here. The market created this higher low here, came back, took out this low here, and then went ahead to give us a break of structure. So this is what we classify as a valid break of structure in under true SMC normal terms. I know I've talked about this a lot in our channel, but we always visit it so to make sure that the people that are watching their first video, or this is their first video, they can get a general point why we do not mark this as a break of structure and this as a break of structure and here as a change of characters. Now we have this market pushing up here. Now you can see here the market pushed down here, created a low here, and then went ahead to create this break of structure here. Obviously, this is a valid break of structure. Now, this is where the main problem comes in, right? You can see that this might happen on a smaller time frame like the 15 minutes. You have gone to your 4 hours, you have identified that okay, this market is pushing to the upside on my 4 hours. Now you come down to your smaller time frame, maybe the 1 hour or a much smaller time frame. You start looking at it, you start seeing this. So you assume that okay, these are break of structures to the upside. This market is trending to the upside. So these are just continuations from the previous 4 hours. So you mark this break of structure. When the market comes here, you buy and then you have your this inducement is taken out, you buy, then the market goes ahead to create the next break of structure. After creating the next break of structure, you are looking to buy somewhere around here. Now what normally tends to happen a lot here is this market will just come and pass through this zone as if it doesn't exist. Now the reason why this market passed through this zone as if it doesn't exist is not because this year you marked out all of this structure wrong. All of this your structure was right. But now, if you look at it now, you can see that though this structure show that this was a change of characters here, right? One more thing is once this has shown you that change of characters here, you're looking at okay, this internal time frame has started giving me hints that the market wants to reverse. So when the market is coming back up here, I want to be selling to continue to the downside. But now the market will come down, mitigate something below, and goes ahead to give you a break of structure above here. Now you will think that okay, this market gave a change of characters here and gave another change of characters here. While in reality, that is not actually what happened. What happened is you look at this market here in a smaller time frame, and these were just small structure in the bigger picture. So when the market started respecting your 4 hours or your bigger time frame, this structure now acted as the inducement. So the market used your small time frame structure as inducement to mitigate the 4 hours time frame. In this case, right, because this example that I'm showing you, it's based on the 4 hours and within 4, 3, 2 hours, right, and the 30 minutes. So you need to be wary of this, right? Once the market breaks through, once you see a change of characters, you need to refer to a much bigger time frame and see actually if this change of characters is actually valid on the bigger time frame or it's maybe a start of a pullback to mitigate a bigger time frame POI and continue in its direction. So guys, without wasting any of your time, we'll be going straight into the chart and we'll be analyzing and I'll be showing you an example which we got there on the chart. This is Euro card. Okay, so now coming down to our example here, we can see from here that this market actually is creating our higher highs. This market is creating a higher high. We have our higher low here. We have our new higher high, our higher low, and this next higher high here. So you can all agree with me that this market is trending to the upside. You can all agree that this market is trending to the upside, especially considering the fact that we had this inducement right here for this. Actually, this is where the inducement is. That is our first pullback. So this is our inducement here. The market takes out that inducement, goes ahead to create a break of structure, and the market even comes back to mitigate this our extreme order flow right down here. So after the market mitigated that, it went ahead, gave a break of structure, gave an inducement right down here. That is a minor inducement. So after giving this inducement, the market went ahead to take it and go ahead to break and to give us the next break of structure, which is at this level here. So from this point of view here, you can see that this market clearly is bullish. This market is clearly bullish at this point, mitigating extreme order flows and pushing to the upside. But now, if you get too deep into this time frame, right, you discover that even though this market is being bullish, at some point in time we had a bearish break of structure, right? This is known as a change of characters when the market wants to reverse direction. Now, what can we see from here? This was our previous break of structure. This was our previous structure. This was our strong low, right? This break of structure took out liquidity, which is this inducement that is sitting below this low here. So after taking out this inducement, the market went ahead, break structure to the upside and could not sustain. So it went back down and gave us a change of character. So this signal our internal pullback, the starts of our internal pullback, right? This signal the start of a pullback. Now you can be thinking that this market is going to keep selling from here to the downtrend, but I'm going to shock you, right? This market might not sell as long as you think, even though you have this change of characters. So looking at this from that change of characters, you can see that okay, the market mitigated an order flow here, and so it mitigated this order flow, right? This is the order flow here, and so after taking out an inducement, it has been selling. It gave a break of structure, and these are more confirmations to you that this market is actually trending to the downside. People will take another break of structure here, you take another break of structure here, and you will still want to sell somewhere around here. But now this is just your 15 minutes time frame view. Now let's switch to a much bigger time frame and let me actually show you what the market is doing on our bigger time frame. Now, this happens to be now our bigger time frame here. What do you see here? You can see that this market has been trending up. This small structure here will never reverse this market to take out such a significant low like this one. So what you can see if you zoom out is this market has been in an uptrend. What I showed you here has happened before over here. It has happened before over here, and it has happened before over here, right? Not all of these change of characters will actually sustain price. You need to know that even inside here, I got a trade here and it was the same principle. From our bigger time frame, we just notice one thing, right? We have market take out inducement. Actually, this is where our inducement is, but if I mark it out here, you will not really see it. So I can indicate for the people that are seeing you here, right? This is where our first pullback is. And then we have this move, sweep liquidity below this low. So after this move, sweep this liquidity under this low, the market went ahead to give us a break of structure here. So this is where our break of structure on our 4 hours time frame is. So when we have a break of structure on the 4 hours, we also have a strong low and a strong high. So this happens to be our strong low on our 4 hours time frame, and this is our weak high up here. This is the weak high on the 4 hours time frame. So when this market violated this also acted as liquidity, because you see these lows here, these are liquidity points. These are liquidity points, right? If you happen to come down with a trend line and draw it, you will see liquidity resting below these lows here. So these lows did not just act as structure in a smaller time frame to fool people to start selling here and for some people to start buying. It also acted as liquidity to send prices down here and then send them back up. So this is a trade. We are currently still in this trade, and I send the trade on in the Telegram channel. So this is exactly the principle I use for this trade. So watch out not to fall in this trap here. When you see a structure on a smaller time frame, make sure that that structure aligns with the bigger time frame as well. When you see a change of characters here, try to understand where that change of characters is pushing prices down to. If it's a downtrend where the change of character is trying to push price to, because not all change of characters will show a trend reversal. Market also has a lot of fundamentals and a lot of economics behind it that will actually reverse a market. Technicals might work out for a short long, but fundamentals will actually push prices in a long run. So this is it, right? And this market has been trending up. Don't think that this small 15 minutes change of characters will ever send prices to reverse and start pushing to the downside. So that is what I wanted to teach you. Make sure that when you are trading a trend, right, make sure to understand where that trend is in a bigger scheme of things. If we focus too much on this 15 minutes, we'll get stopped out at some point here, and then we'll also take a trade and get stopped out. That is why some people they go into a losing streak at times. You go into a losing streak and you cannot understand, because let's say you were buying here, you bought here, make money, the market came back, you bought here, and let's say the market did not change characters here, it went up again, you made money. Now, now, right, when the market initially wants to change characters here, you will buy here and you lose money. When you buy here, you are going to lose money. Now you think, oh, my next trade, I'm going to recover. Then the market pushes down, it comes back up here, you sell, you lose money again. You sell, you lose money again. Now you start doubting yourself. Is maybe I'm doing something wrong, or maybe I've not just mastered the strategy. It's just because you have not understood where the market is in a grand scheme of works. For me, initially, right, I initially bought at this point in this trend. But when I bought at this trend, I lost money. I did not care. I lost about $250. That is how much I risked per trade. Then the market came back down here. When I identified this opportunity here, I bought. I lost money again. Now, the reason why I lost money here was due to my negligence. At first, when the market came back here, right, it went up, gave us a change of characters here. And when it came down, I bought somewhere around here. The market came back to sweep this low. Now, this was during news and the momentum was very high. So spreads increased and tapped me out of my position. But I got a 5 minute re-entry and I happened to enter. Now, though that loss that I lost that those two losses amounted to about $500. When I initially made profit, I made a profit of 1,000. Sorry, it was $2,100. $2,100 with this move here. This is some I closed out somewhere around this zone here like this. I posted the results in my Telegram group. If you want to check them out, the link will be in the description of this video. And please, if you are still watching to this till this hour, it means that you find value in this content. Please hit that subscribe button, like and leave a comment on what you think about the lesson and what you think I should be covering next. Now let's go down to the smaller time frame. Let's check the 5 minutes time frame or the 1 minute time frame and try to understand, right, because the market was still in my point of interest here. The market was still in my point of interest. So if you happen to look at this here, you can see that the market swept this low, then it took out this high. When it took out this high, I immediately entered one position here. If you check the Telegram group, all these images are there. I immediately enter one position here. Then when we had this another break of structure to the upside here, I took another position at this zone. I took another position here, and all my stop loss were below here. So this rally happened and I happened to recover everything I had lost within the week. So that is what I wanted to tell you about. And coming next week, we'll be expecting this market to rally up at least to 50% of this move here. 50% of this leg, right? We're expecting the market right over here. So if this market happens to push down below again, we'll be looking to take a re-entry and expect the market somewhere around the 50% at least. But I think the market is going to take out this high in due time.